Hello and welcome to another episode of FinTech Focus TV. We're live from the FIX EMEA Trading Conference 2026 and delighted to be joined by Laetitia from Aquis. Laetitia, welcome.
Thank you for having me.
Please give us a bit of an introduction to yourself and the business you work for.
Okay, so I'm Laetitia Visconti. I'm head of market structure and recently appointed as well head of product innovation for the MTF. Aquis is an exchange that has been created almost 13 years ago. We have three main business lines. One, which is the MTF I'm part of, which is secondary market trading. AQSE, which is our listing venue for SME growth market. And the last part of our organization is technology. We actually selling our matching engine to other trading venues. We've been recently acquired by the SIX Group, and so now we're part of a bigger organization rolling up into the exchange business of the SIX Group.
Yeah, I understand. Thank you. And how long have you been with the business?
Just a year.
Just a year,
I
okay.
joined a year ago, almost to the date.
Yeah.
Coming from Barclays, where I spent 14 years on the trading desk, looking after access to exchanges and market structure.
Understand. And you must have joined just as that SIX acquisition was taking place?
I think I had the first interview maybe a week or two after the first announcement, so I knew that was coming.
Okay.
Definitely.
In fun time to join the business, I'd imagine?
Listen, it was absolutely brilliant time to join the business. SIX is a very good primary exchange.
Yeah.
It's an organization that is really trying to innovate and do the right thing for the market.
Yeah.
So I think it was a very good association, marriage, whichever way you want to call it.
Yeah. Two businesses we know very well, and actually you see it from the outside, and it looks a very good fit. And look, you were on a panel today.
Yep.
Can you tell us a little bit about what you were talking about and key takeaways?
I think the whole morning was really interesting because we started kind of like with an absolutely brilliant speech, keynote speech on a very fundamental view of the market. So
Yep.
that was a welcome change from the usual nitty-gritty detail of regulation and RTS implementation. And we moved on to the classic regulatory panel, and I think we had a lot of very good news actually in this panel. Like, it seems like the regulators are really keen to understand what are the problems we want to solve in the market. They have identified, from what I understood, the same kind of gap we're seeing in the package being proposed with the SIU mainly with the SIU in Europe. On our side, that's a point I reiterated on my panel actually too. It's very important for us we're getting the right regulatory framework to foster innovation. I don't think you can have market growth without market innovation. And as I said on my panel, there is a little bit of, how can I say this, a Manichaean way of seeing the market, kind of black and white. Mm-hmm. It's as if the only real valid model of a trading venue has to be the central limit order book. And on the other hand of the spectrum, only certain type of bilateral trading may be seen as being really relevant. I think the reality is much more nuanced. Trading in a highly electronified market on the verge of integrating AI basically means you're going to have more and more of this need of segmentation to find the right kind of shop for the right kind of trade. And this is only possible if you allow both on-venue and off-venue trading to have a little bit of flexibility in terms of creativity. So I think that's one of the points we discussed this morning on the panel, in addition to the measures that are being proposed in the SIU. As I said, I think it's a very ambitious program because it's touching so many regulations. It's quite daunting.
Yep.
It's quite difficult to understand how everything is going to interconnect. But at the same time, on some subject, in particular the subject that impacts us, it feels like we're only tinkering at the edge. So for us as a trading venue, the ability of being able to deploy a new way of managing workflow, new order type, different ways of finding multilateral trading opportunities is really hampered by a number of measures in the current regulatory framework. So the dark caps, also I should say cap now, the way the waivers are being interpreted, it doesn't leave much legal room to be created. Yeah. We also talked about the potential impact of, we talked market data. We were supposed to talk about consolidated tape, so I'm happy to cover the points I would have made on the consolidated tape and reiterate my point on market data. On the consolidated tape, we should see EuroCTP go live in July, let's say during the summer this year. The price point is very attractive because the EuroCTP has released the first view of the tariff. It's going to be, give or take, 100 euros per user.
Okay.
This is 10 times less minimum of what you would pay for a trader. Right. So this is really a very attractive price point, and we do hope that this price point is going to deliver on the promise of the tape, which is much more penetration of our market data as a region to the end investor. And hopefully, by congregating the data coming from trading venue and coming from other venue, really try to start to broadcast the real liquidity we have in Europe. That's been one of my pet peeves for the last year. I think too often people are only looking at our market by looking at the on-venue liquidity, sometimes only the primary exchange. A few numbers around this. If you were to look at only the primary venue volume for the issuers, you're basically only capturing 35% of the liquidity. If you add the MTF, you get to 50%. That is, to me, really annoying and almost angering, right? Because I have, like, our MTF has 6% market share, give or take. What do I prefer, 6% on 50 or 6% on 100? I much prefer 6% on 100.
On that, yeah.
So, and I think like there's a rule that has been true in this market is liquidity beggars liquidity. If people have the feeling that the daily volume in European stock is 35 billion, while actually the easily accessible volume is closer to 80, when an investor goes to their risk manager, and the risk manager tells them, okay, you want to trade Spanish stocks, no problem. Tell me what is the liquidity you can access. If suddenly you're only taking into consideration 35% of the volume, your risk manager is not going to give you a lot of budget to play with. So I think this is creating actually attrition of volume at the very inception of it. And okay, don't get me wrong, I'm a trading venue. Do I like to have competition from bilateral trading and other venue? Of course I don't. But it keeps us on our edge, and we are competitors to others.
Of course.
So if we're being really honest, I think we have all an interest to demonstrate that we have a market where you have people ready to trade on risk for our issuers, and who are here day in and day out. And this for me ties up into regulation because we need to fix the data. We have a tape that is going to go live, which is going to broadcast a lot of technical trades and a lot of trades that are very complicated to understand. And there is one rule in life: if you don't understand something, you don't come close near to it. So the tape, great hopes, it's going to give us this like amplification of promoting our market. Worry that we're not going to broadcast data whose quality is good enough. But it should help.
Yeah, indeed. And I think it's just interesting you sort of talk about that relationship between regulation and innovation and getting that environment right to still promote, because without innovation, where are we?
For me, it's kind of obvious that we need to go more the route that the UK has taken to basically let venue use all of their waivers they have at their disposal, that we're removing the caps. We have not seen an explosion of the dark, like some people were saying. If anything, when you start digging into the data, what you realize is the behavior and the reaction of the market to dark trading is much less impactful than it was 10 years ago. Like the data shows this compared to price formation studies that were published almost 10 years ago. So you have a case to say, like, the market learned how to use those new tools. They're not as threatening to the price formation than they were. They actually have a natural plateau of how much you can do. So is there really a need to make those artificial thresholds that actually trigger a complete reconfiguration of the liquidity? Once again, it makes this more difficult for people to understand.
Yeah. Yeah.
When you're a broker, you don't want to go to a client and say, oh, yeah, this stock is capped, so the ventilation of the liquidity is going to be like this. Don't worry, in 3 months it will be gone, it will change again. This is not conducive to people even wanting to go beyond this kind of level of complexity. So for us, it's simplification, it's re-injecting innovation, but having much more of a supervision angle. Basically, let people try things, and if they prove being wrong, then intervene.
Yeah.
Which I feel is the direction of travel in the UK, much less so in Europe.
Yeah, I understand. And as well, before, off camera, we were talking about retail execution and sort of models around that. Tell us,
So retail, there's been all this debate about PFOF. Is it good? Is it not good? I'm not sure I have a firm opinion on this one.
Okay.
I think it's always there's always many ways to achieve the same outcome. My worry on the focus on the retail is more, are we putting in place the right incentive to make sure that if we manage to motivate the retail to invest in equities, they're going to invest in our equities? Because Europe is talking about unlocking 10 trillion savings from retail for financial markets. What is the guarantee that they're going to invest in our issuers? What is the guarantee of how much is going to go to SMEs, to small, newly listed companies? It's very difficult to direct this flow. So if you don't have a real holistic approach to it, you may actually motivate people to invest in equities, but see most of this volume going abroad. And I encourage everybody to do a test. Hear the AI, do a very simple prompt. Just say something like, I have money to invest in the equities market, what should I do? And you will see that most AIs are going to tell you 50 to 60% on S&P 500 ETFs.
Which I think was the summary this morning, right?
The summary this morning of the keynote speech.
Yeah.
So I'm like, let's unlock 10 trillion, but if 6 trillion are going out, I'm exaggerating, obviously, but that's the point. So I think if this is not, so there's good signs, not everything is negative, because you have a lot of things being done around how can we incentivize European funds for retail, same on the British side. But if at one point we don't put on the table the difficult discussion, which is taxation, I don't think we'll have enough of an impetus for people to be motivated. So that means we need to have an adult discussion on stamps, FTTs, and we also need to have a tough discussion on how do you incentivize further people investing in our region, our issuers, our economy. And the reality is it's a very difficult nut to crack, because taxation is each member state's power, and it's not something that you deal with at European level. So I'm just afraid that there's a lot of good intention, but we may end up exporting capitals instead of actually really fueling our economy. And don't get me wrong, there's a lot of things at stake here. We do need this investment for defense, for the green transition, and for the real economy, meaning firms.
Yeah, I think this is a conversation I think we could carry on having for a long time. And I think there's a number of people that are probably going to want to carry on this conversation, will have something to add to it. How do people find you if they want to reach out?
LinkedIn, otherwise directly on my email at Aquis, Visconti at aquis.eu.
Perfect. Laetitia, thank you so much for your time and your insights. Thank you very much for watching.